All right, we're back. This is episode number 4, but really it kind of feels like episode number 1 because we are actually live on YouTube now.
Yeah,
And
and we actually have a name now, so
we
that's
actually
very
have a name.
exciting.
Yes, I guess I should say, welcome back to Power Nap. If you are joining us for the first time or new, we want to share that this is an initiative that we started because we are two curious people with backgrounds in business and finance and tech, and we wanted to learn ourselves about what's happening in the world politically, economically, and also share a little bit about our perspectives.
And have a good time while doing it.
So powerful insights, nap sized.
I'm personally a big proponent of power naps in my own life, so I thought this title was
Yeah.
very fitting. Yeah.
So today's topic is, why has gold been ripping? Why are gold prices so high?
Which is, I think, a bit unfortunate for anyone that is looking to acquire some jewelry. Those prices have been increasing as well.
Yes, which both of us, I think, have had experiences with most recently. I just got engaged a few months ago and we're getting married. And in Chinese custom, you gift 24 karat gold. Actually, if you go to China, a lot of 24 karat gold. So I have this bangle, I don't know if you can see it. It's
Oh,
this
wow.
big one that my relatives, some of my relatives bought me in China, and it's sold by the weight, with of course like the cost of the actual raw material, but then also the make charge on
Hmm.
top of that. And gold is pricey, I'll tell
It's
you.
pricey.
It's gone up.
Yeah, I mean, I actually, just personal curiosity, I've always heard that 24 karat is maybe a bit too soft to kind of wear for daily use, but it seems
Yeah.
like, people are wearing it and it's been okay.
You're right. It was just surprising because I have a pair of 24 karat earrings too for my grandmother, and those are so malleable. You just kind of like
Mm,
break them open to put them on. And this has held up really well. I'm not sure if it's the shape of the bangle, or maybe it's I'm being scammed, but it's kind of like a permanent bracelet, so I actually don't
okay.
really take it off.
Yeah. Yeah. Well, looks really nice.
Thank you. And you recently, I hear you've had
Yes,
some
I
experiences.
I've had a slightly less positive experience. So you've become, I guess, a net investor in gold in the last couple of months or couple of weeks. I have been an accidental divester. So I lost some jewelry when I was in New York. It was a ring. It just came off with my glove, and I was rushing down the subway
No.
steps. I tried to
Oh,
look for it, but that, is a losing battle in New York. But I was actually surprised by how nice people were, the number of people that stopped. I mean,
wow.
I think I must have looked quite distressed and kind of,
Yeah.
scurrying along the station.
Yeah.
But no, it didn't work out. And I have heard somewhere that if you can get past the like gross, disgusting, grime in the sidewalks, if you just
Yeah.
pan it, you probably would actually find some really nice stuff, because
Really?
the wealthy residents of New York, yeah, lose jewelry, lose diamonds, lose earrings, lose rings and stuff. And so I think once I was, realized, okay, well, I guess my ring is now part of that stash for
Yeah.
some hardworking person to find
Yeah.
later.
Well, and with these prices, honestly, it might be worth it
I think
to
it might
go
be
out
worth
there
it. Yeah,
with
yeah.
like a metal detector.
Exactly. Yeah,
Yeah.
exactly. So yeah, I mean, just always thinking of side hustles, right? Potential
Yeah.
side hustles.
Yeah. Well, I'm
Yeah,
sorry to
so
hear that. It's
that's all
unfortunate.
right. That's all right. Fortunately, it wasn't sentimental, so at least it wasn't
Yeah.
wasn't a loss
Yeah.
on that side.
I will say my fiance is very happy that I constantly have some kind of value on me at any time tied to me physically, in case, I don't know, we lose all our cash in the stock market.
If your house, I mean, unfortunately, with the
Well,
last episode,
yeah.
right? If something happens to your belongings, that
Yeah.
is locked on you. Yeah, but that it
Yeah.
makes you more valuable as a kidnapping
That's
target.
true. That's true. Maybe I should publish this on the internet. We'll see.
Yeah, maybe. So gold. Yeah, let's talk about it.
Yeah.
What I would love to hear a little bit about the history. I mean, it goes back for millennia, right? Of
Yeah.
humans valuing gold.
Yeah.
So yeah, tell
I
us a
I
little
think
about
at
it.
the think the very beginning, gold was purely valued because it was so malleable for
Mm.
decorative purposes, like jewelry and all these ornamental purposes. So maybe from there, I think it became, it was valued for its actual use, where it's different for now. Of course, it's still used for jewelry, but we're talking about gold as a form of investment and a store of value and everything too. But at some point, I guess, gold started to be traded for a form of exchange. This is before paper money, but it was actually gold and silver, I think, like bullion that was traded.
Mm.
And that, I guess, if you keep going forward, during when gold was discovered in North Africa, that led to trade between Europe and North Africa. Then later to the Americas, to Central America, and kind of the taking of gold back there in exchange for like Christianity, I guess, which I don't want to laugh about. The price of heaven is priceless.
Yeah.
But then you keep going, fast forward, a lot of the gold that was found mined from the Americas and the New World, I think, fueled the growth of Europe during the Renaissance ages. And
Mm.
it probably financed, a lot of the artists like Van Gogh, these people that we think about today. Um, then keep going forward. Eventually, governments, actually, maybe it was before this time, I think governments started issuing, like people were trading gold, but then governments started saying, oh, no, this is the actual kind of like certified coin, government issued gold coin that was stamped in a certain way, that was certain weight. And that was legal tender. So that was probably the start of then what later led to gold backed paper money.
I think we have to just bring up, one aspect is it was a currency of exchange, but in some ways it's quite challenging to use as a currency of exchange, right? Because it's physically very heavy. So think about having to pay for everything physically with like truckloads of gold, which they did in the past, right? But then also, thinking of how do you break up these pieces? How do you get smaller
Yeah.
denominations? All of that. So I think so the paper money really became a more convenient way to exchange as a means of exchange. But there was always, in the beginning, it was backed by gold, right? That the
Yes.
paper had value because you had the gold behind it to,
Yes,
yeah.
meaning if you had this paper money, you knew you could take it to the government, to the bank, and they would give you X amount fixed for that, which was a great system. And we were on a gold standard until I guess it first started post World War II that we started moving off of that, right?
I think I mean, Bretton Woods was the conference or the group of people that decided that the value of gold would be, or the value of currency would be fixed against gold. But ultimately, it was the need to spend by governments that broke that, and it was really I believe Nixon during the Vietnam War, right? So in the early
Yeah,
1970s, where they needed more money to spend on the war, but they couldn't produce more gold, and so
yeah.
they then devalued the value of paper money against gold.
Yeah. And that, I think that has been true over history, which is when government backed, fiat paper money with gold, what the tendency was. And by the way, I think it was illegal to hold gold in your personal,
Oh, was it?
you were not allowed, yeah, as an American citizen, you were not allowed to hold gold outside of like small ornamental jewelry or things like that, because
Mm,
they wanted to enforce the dollar, the paper dollar, as the monetary form. But the situation that has always kind of been created by in this kind of gold back situation is when governments then don't actually have enough gold to exchange. It's okay if I'm just going to go alone and exchange my paper money for gold, but what happens if there is some kind of fear, uncertainty
mm,
that the paper value is devaluing? We all want to get gold, and you kind of create this bank run
mhm,
situation. So as you said, eventually, I think first what happened was we we devalued the value, the kind of tie between the US dollar and gold, whatever amount that was, it went down. And at some point, other countries took themselves off the gold standard, but were still pegged to the US dollar, which
mm.
was also pegged to the gold standard. But eventually, as you said, you know, we went off of it, I think in the I want to say like 1970s, if I'm getting that
Yeah,
right.
yeah. I think that's when the any sort of gold back system, at least in the U.S., was became out.
Yeah. Yeah. Well, maybe we can talk about like why is gold valuable?
ultimately it's valuable because we place value on it, right? I think there are a lot of other, I think, commodities that have tried to emulate gold, like diamonds, right? Maybe diamonds,
Mm.
gemstones have
Yeah,
um,
I would hate if someone listening to this pod had moved their money into diamonds.
into diamonds, right, right. But gold, I think, really does have a special place. I think part of it is the long history of valuing gold. Its ubiquity across all cultures, all peoples that believe that about gold has value. So I think part of that is really just the faith that we put in it. But gold is in the investing space, it's a type of investment, right? So it belongs to a type of asset class that we would call real assets. And real assets are assets that have some value or purpose outside of just being an investment, right? So if you think of the contrast to this, or the counter to this, is most clearly a stock, right? You invest in a stock, you hope that the value of the stock goes up, maybe you get a dividend, but the purpose is investing. You can't, what else can you do with the stock, right? You can't you can't eat it, you can't have fun with it. There's nothing else you could do. But real assets are different in that there's something else you can do with it. So I think the most clear example of this is going to be a house, real estate,
Yeah.
right? The real
Yeah.
estate, the house has value and that price will go up and down. But the house also has value because you can live in it, and you can, change the design. You can, make it, shape it to your preferences. So it has value outside of that. So gold, as we've been talking, has value because, you can make it into jewelry, you can make it into ornaments, it can be used as an input into certain, manufactured products. And so it has value outside of its investment value.
Yeah.
And that's a real
Yeah.
asset.
I mean, I would agree with you. It is it's a hard asset. I would say it's a hard asset even more than it is a real asset because you're right. It can be used as jewelry, but I think it's not as real of an asset class as real estate, and you do have now, I mean, of course you have this through REITs and things like that, but you have the gold ETF, which it is just, we're back to, you could say a stock is real in the sense that there is a company behind it, but the gold ETF, you really are just kind of betting on the price of gold going up versus owning physical gold bars that, you can buy from Costco, which by the way, Costco has been sold out
Costco
of
sells.
gold for a while.
Yes. Yeah. And
Yeah.
those are just gold bars.
Gold bars, yeah.
Yeah.
But what I was going to say is for me, gold is valuable because it's a hard asset, meaning you can't just make more gold. And I think, well, at least if so, we haven't, to my knowledge, discovered how to do that yet. But, in the case of diamonds, we realize the price, prices of diamonds have been driven down massively, massively. And I would hate to be De Beers right now because
Yeah.
we've basically lab grown diamonds that, De Beers negatively says, oh, but these are lab grown in a microwave in China. But realistically, to the naked eye, into,
Or even
a
under a
kind of,
microscope, they
even
are,
under a microscope,
yeah.
they're chemically
Hmm.
compound kind of the same. So
Yeah.
I think, we're talking about scarcity.
Definitely. Yes, the supply of gold is limited, correct. And there's a fairly consistent amount of gold that is produced every year. And that amount of production doesn't change a lot. I mean, there's some small levels of variation depending on, mines and, production and things like that. But in general, the supply is fairly steady. So really what drives the price of gold is mostly demand, right? Because
Yeah.
that demand shift is going to outweigh the fluctuations in
Yeah.
supply.
And I think we see demand for gold, correct me if I'm wrong, but generally go up when times are uncertain, economic uncertainty, right?
Yeah, so there are a few, factors I think influencing the price of gold more recently. One of them has to do, and some of them are temporary, some of them are structural. So one of them has to do with something called a real yield, which is what you are earning on an investment after taking out inflation, right? So subtracting inflation or expected inflation, what is the real return on the
Yeah.
asset?
And
And
just to even like further elaborate on that, the interest rate has been really high in the past few years, meaning you could just leave your money in a high yield savings account and earn, I don't know, 5%, maybe 4%, which seems like a great deal. But then really, what is inflation, And is your money making enough if inflation, I think the CPI is, or the Consumer Price Index, and what we look at, measures of inflation were kind of comparable, honestly, if not higher than the interest the interest rates offered. And then CPI actually doesn't factor in other areas of inflation that aren't part of that standard basket that the government uses to calculate inflation. So with that being said, I remember my parents being like, oh, it's just great. Leave your money in these low risk assets. And in reality, it's like, wait a minute, the real return is probably still negative.
yeah, I mean, depending on what period of time you're looking at, but yeah, for the last few years, there have been times when your real return was declining, right? And that decreases the attractiveness of these investments. And so gold, is different in the sense that it doesn't, if you think about it, I mean, a real yield, or if you think about it more, kind of most directly, it is the interest rate that you are earning, right? And so when that real interest rate increases, you probably want to put your money towards those types of investments, right? Which means you're probably going to take money away from other types of investments like gold to, put towards, investments with a higher real yield. And the opposite is going to be true when real yields are coming down, right? That means that those investments become less attractive relatively to something like gold that doesn't
Yeah,
earn an interest rate or doesn't
right,
earn a coupon or a dividend or something
right.
like that.
Which is interesting that gold prices, I mean, in the past 5 years have gone up, like maybe almost not double, but maybe 70% or so, 80% higher than they were 5 years ago, when interest rates actually were really high. But you're right, like the real interest rate was just, um, you know, I guess quite low given
Mhm.
inflation.
And the other element of it as well is gold is, we've talked about this as a safe haven asset to some extent, right? Where people have faith in the value of gold. You know that if you have those gold bars and they're under your mattress, everything else falls apart, that they will be worth something, right? And I think that faith isn't always there when it comes to other types of investments like, equity. Like what if that company goes under? What if, just a general economic environment is poor? All of these doubts that you have about, other types of investments don't really factor as much when it comes to gold because
Yeah,
of its kind of physical presence,
right.
which is, again, as talking about earlier with the real assets, that's actually a quality shared by most real assets because they have some intrinsic
Yeah.
value outside of what, financial markets are
Yeah.
assigning to it.
I was gonna say, I wonder how people are investing in gold these days. If people are physically actually, well, some people definitely are because
I think it
Costco is
depends on
sold
who you
out.
are. Yeah, because
Yeah,
Costco's
probably.
definitely sold out of gold bars.
Yeah.
And I was reading some statistic of like how like there are certain cultures that really value gold and really value like gold jewelry, and the percentage of gold that is owned by like Indian women is actually
Mm,
quite high because they really value having that gold physically and in kind of decorative jewelry form,
yeah.
and also in physical, probably gold bar form. So I think there
Yeah.
are also different preferences depending on, who you are versus you and I are probably more interested in gold ETFs.
Yeah. Which
um,
I don't hold any gold ETFs, only gold, I mean, in piecemeal amounts at home,
Only on your
but
arms. You only
only on
accept
my
gold on
arms
your
and my
wrists
ears. Yeah.
and your
Yeah.
ears.
But I think, when the ETFs came out, that also probably, or for sure, kind of blew up the level or democratized the ability to invest in gold, given that you now have the possibility of like buying a low amount, fractional ownership
Yeah,
over gold.
absolutely. And it's much easier, right? You can just go into whatever, account you use to trade and buy that instantaneously, right? As
Yeah.
opposed to the difficulty of going to physically locate gold, is
Yeah.
it's a much higher barrier.
Yeah.
I want to talk about one other driver of gold prices, and what we talked about in terms of safe haven asset as well as real yields. These are some a bit more temporary, right? These are kind of cyclical developments depending on where we are in the economic kind of cycle or the business cycle. You'll see these developments change and the appeal of gold change with that. But I think there is one factor that is actually quite structural, or I think could be quite structural, and that is central bank behavior, which is, I know, something that people don't typically think about day to day unless you're me and my job. But so central banks hold reserves, so they hold foreign currency or some type, assets that help them, manage their monetary policy, manage their exchange rates, manage, all sorts of things that central banks have to deal with. And that's a very critical tool. And how you hold those reserves is a very important decision for every central bank. They're typically held in very safe assets. So, historically, treasuries is the most
US
common.
dollar.
US dollars, yeah. Treasuries, euros, SDRs, which are the IMF's currency. So these very safe assets. But what we've actually seen over the last few years is that increasingly central banks are holding more and more gold. They've always held gold, but the percentage of gold that they're holding is increasing. And this actually has been because of partially because of the US sanctions after the Russia-Ukraine war, where the US government, weaponized the dollar. That's essentially what it did. And
Can you talk more
decided
about
to.
that? What do you mean?
Yeah, so it shut off Russia's access to SWIFT, as well as the ability to do any business with banks. So it couldn't actually use the dollar reserves that it held, which means functionally they became useless. And what that means is that when even though it held reserves in dollars, it couldn't it couldn't use them, which meant that it defeated the purpose. So in order to protect themselves from this type of action by the United States, or just to reduce the potential risk of this in the future, right? Central banks are, starting to hold more of their assets in gold, which is seen as a much more neutral, store of value, right? There is no government in the world that controls, gold supply or gold value or things like that. So this behavior, central banks have more than twice increased their amount of purchase of gold since the war started. So that actually has been a structural, in my opinion, a structural change for the demand of gold moving forward.
That's really interesting. I hadn't thought about specifically the war, Ukraine, Russia. For me, I was thinking about it from the perspective of just general confidence in the US dollar, with the US debt to GDP ratio continuing to go up. And, post COVID, we saw a lot of printing of money. We were kind of dealing with that excess money injected into the M2 money supply. And now I think the inflation that it's driven in our country, but also in other countries, that a lot of them, as we said earlier, their kind of safe haven asset was the US dollar, US Treasury bills, right? So for me, I'm also seeing it as maybe other countries' reaction to maybe fearfulness around the actual longevity and store of value of the dollar. And if you look historically at every civilization where we have kind of paper money that a government controls, what happens as debts continue to rise? Government just basically keeps, we say printing money, but really just issuing bonds and buying bonds and injecting more and more capital into the money supply. So from that perspective, for me, it's kind of demonstrating maybe a lack of confidence in the strength of the dollar.
Yeah, I mean, I think that is a very legitimate concern. And I think to your point, if you go back and study history, right, no currency has remained supreme forever, right?
Yeah.
Forever. And a lot of it oftentimes has to do with poor economic management and monetary management, where the currency is then subject to strong depreciation pressures, right? Which then no longer makes it a reliable, stable store of value, and really reduces its appeal to be, the reserve currency.
Yeah.
Yeah, so I don't know if we're quite at that point yet, but it's
Right.
definitely a hotly debated topic within, within these circles, about, the longevity of the dollar, and whether, it will continue to reign supreme.
Yeah. It's probably
Yeah.
still, decades away, right?
Yeah. I mean, obviously, we're not predicting the imminent
Yeah.
doom of the dollar on our
Yeah.
4-episode podcast. That would be a
Yeah.
bold statement. But it's definitely something to to pay attention to.
You can't almost talk about gold without now talking about blockchain and Bitcoin.
Maybe this is an episode for a different podcast. I think we've had private, personal conversations where we kind of perhaps we see these trends, a bit differently. But I think that is, a lot of these are very legitimate questions.
Yeah, we'll debate that on a different
Yeah,
one.
we'll debate
Well,
that on a
so
different podcast.
here's the question is, do you buy gold, and what would you determine for yourself personally on whether to invest in gold?
So, I do not want to make investment recommendations outright. But I mean, I think it's like I mentioned, gold is a commodity. Commodities are real assets, and I think this is a very valuable asset class, to add, whether it's diversification or to, take advantage of certain, economic environments, that these are, it's a very important tool in the toolbox. So, I think it's again important to pay attention to and to understand properly.
Yeah, it'll be interesting to see how the markets change more broadly. Now it seems like interest rates are, slowly starting to come down,
Mhm.
which would suggest that gold, keeps kind of going up in value. We'll see how inflation does. I think it grew, it's coming down, but we'll see how that continues over the next few years of this administration.
What about yourself? Are you, after this conversation, are you going to take a look at gold ETFs?
Yeah, I haven't. I really haven't. I feel like I've had money in other assets and also have definitely have, my kind of like the US dollar, the high yield, all of those. But as we said, I think the depending on maybe I don't know. I'm curious to see where the markets go the next few months of this administration. Things have been moving quickly up and down. So depending where that goes, maybe it's probably worth just even putting a little bit, was what, like, I don't know, sub 5% of my portfolio in gold.
Yeah, well, we can take that offline and talk about our personal investments in more detail.
Yeah.
But I mean, I now everyone knows that you have some gold attached to your wrists, so that's
Yeah. Yeah. I am the investment, actually.
you are the investment. Yeah, aren't we all? We are the investment, Faison.
Yeah.
That's
Yeah. Yeah. Cool. Anything
yeah,
else on
sounds
this
great.
topic?
No, I mean, I think we covered a lot of ground today. But yeah, it's always nice chatting, and hopefully people listening find it, interesting and valuable too. I think, as I
Yeah.
mentioned, I think these are, whether you agree or not, whether how you see it moving forward, I think these are important dynamics to understand. So
Yeah, definitely. Give us your feedback.
yes, please. Okay,
Well, bye. See you next
bye. Chat
time.
next time. Bye.